Yo yo yo, welcome back to the channel. In today's video, I've been teasing a video for a long time on Blackberry, talking about how I was gonna make a video on it. I promise I didn't not do it on purpose. It's just that, like, AMC updates pretty much every day. Making sure that I'm looking at the chart related to AMC all the time, keep us updated, because I just feel like there's a lot going on with it. In that time period, it just becomes hard to keep up with. So this is Blackberry, and this is Blackberry's chart. You're basically looking at it from 1999 all the way up until like 2018. But the key part of the chart that I want to look at for now is this part of the chart and relating it to this distribution schematic. So if you're not familiar with Wyckoff Distribution, it's essentially it's essentially a market phase. And Wyckoff theory in general was created by Richard Wyckoff, who passed away in 1934. So this is a tried and true method of analyzing markets. And I'll put this article down in the description below so you can go check it out, and you can kind of apply it to other charts that maybe you're interested in, et cetera, et cetera. But basically, if you're looking at the Blackberry chart in this period, now everybody who's watching this video probably remembers Blackberry as a phone company from the early 2000s. And you can see here that its stock had its peak in 2007, 2008. This could be an upthrust in phase B, could be an upthrust after distribution. They kind of play the same role in a chart, which is just maximizing profit. You can see here the all-time high is about $149.87. And then afterwards, you saw this distributive sell-off all the way down into these lows. And then eventually in 2020, the all-time low ended up being $2.69, which is crazy to think about, man. Like, wow. What a different, like, what is that? Like, what percentage loss is that if you were to measure it? 98%. So if you bought this peak here in 2008, you were just sitting here, it's going to go back up eventually. Man, you got crushed over the course of, what is this? Over the course of almost 12 years. I'm not laughing at you for that, by the way. You probably didn't do this if you're watching this video, most likely. Maybe you did. Comment down below if you did. I'd be very interested. Anyway, the thing that you want to focus on here is that basically in Wyckoff, it's basically operates on the premise that institutions develop a trading range in which they trade an asset. They create price spikes and price dips in order to exhaust retail out of their position. And in distribution specifically, it's a campaign to keep the price of the stock relatively high so that institutions can sell off. Because if they were to try and sell all of their stock at one time, they would just crash the price of the market. And basically, by the time they get to the bottom, they'd be selling stock at like $2. They don't want to do that, right? They want retail to be keeping the buying interest up so that then they can keep selling the stock for more and more expensive. And each one of these candles represents 1 month on the chart. And you can see how they test the liquidity zone down here. They notice a sign of weakness in the chart. They basically go, okay, we're not getting a ton of support here, but what we're going to do is we're going to create a price rally, right? They create this price rally, and then along the way they're selling off, taking profit, and then they do this big price rally. And this is probably, like, I mean, I wasn't paying attention to the stock market. I was in high school, but this part of the chart, everybody probably thought that Blackberry was going to go up forever at this point. I don't know what the news would have been at this time, what the catalyst would have been, but this is a significant portion of time. I mean, this is, yeah, over a year here in this region of the chart. So Blackberry was probably like a big hype stock at this time. A lot of people were probably analyzing it, talking about how it was going to go up to $300, $500 a share, whatever. And then you can see that on that hype, they really started to dump the remaining supply that they had. So now think about that logic. And then the opposite of that is accumulation, okay? And now we're going to get into the next section of the chart. So let me show you the schematic first. It's this schematic, the accumulation schematic, and volume ties into this as well. And basically what I want to point out the most with volume, if we're talking about volume, especially for this distribution schematic, the thing that can clue you in that institutions are maybe not the ones pumping the price up anymore, like they're not the ones buying at the top here anymore. You see how in this buying climax, right? That's what BC stands for. You have the volume trending up, right? Then you have this dip, which is fine. You kind of level off on volume, leveling off on volume here, right? And then what happens is the price spikes up again, but the volume, it doesn't return to those levels anymore. And in fact, whenever also you'll notice that the green candles dominate here for volume, right? So you see the green candles have higher peaks than the red candles do. And then in this phase, even though the price was skyrocketing up, right? The volume was belonging to bear. So in these little bearish sell-offs, the volume was much higher. And then eventually, you see in this region of the chart, there was a huge sell-off. Now, this was probably related to the '08 market crash, I'd imagine. And we can talk about how these huge market events can play into these Wyckoff methods. Maybe I'll make another video about that one day. Comment down below if you'd be interested in something like that. But you can see that the goal here was to sell these assets. And the reason that you want to look at the volume in that way is because institutions are the only ones who can create a huge volume spike in that way, to the upside or the downside, because they're the only ones with enough liquidity at one moment to create that sort of thing. And then from here, they'll start to create a news campaign in order to drive the price further and further up. All the while they're selling in small portions to retail along the way up. So that's pretty much the whole logic there. I know that I probably over-explained that, but I just wanted to make sure, like, because I know new people might be watching this video, something like that. So let's talk about the opposite of this, which is accumulation. So in accumulation, pretty much the opposite is occurring, right? By this time, when accumulation really started, the stock was $6 and some change, and it had seen a 95% loss, right? Whenever something loses 95%, you have to understand, and this is over the course of like 4 years. In the course of 4 years, something losing 95%, you have to understand that like the public is out. The public is not interested in this stock anymore, right? This is probably also related to like iPhones, the rise of the iPhone in 2008, that sort of thing, right? And then like Blackberry was still heavily associated with phones, and we'll talk about the psychology of that as well. But you have to realize that retail, like normal people, you know, that aren't institutions, don't care about a stock that is now 95% loss over the course of 4 years. Like they don't care. But that works to institutions' advantage. And what they do with that lack of care is that they begin to accumulate. And so you'll see this sort of schematic play out where they keep pumping the price up. Maybe they'll bring retail interest back in here, like, oh, like a new product or security software or something like that narrative comes up. And then they dump the price back down until eventually, now remember, these candles are month-long candles, until eventually retail just loses hope, right? Remember that volume trend that I was talking about before? This is a clear signal that institutions loaded up at this moment. At the moment when people cared the least about the stock, they bought up as much as they could. And then they created an environment where retail thought that the price was going to keep going up. And then eventually they sold it off because they saw retail come in, support this price. They sold it off to scare retail out. And eventually they just worked over the course of years to shake people out of their positions. And then ultimately they created this spring. See this big red wick right here? The spring phase is a key part of the Wyckoff accumulation schematic, and it's the opposite of a UTAD. Upthrust after a distribution. The spring occurs late within a trading range and allows the stock the stock's dominant players to make a definitive test of available supply before a markup campaign unfolds. A spring takes price below the low of the trading range. So see, this is the low of the trading range, the green bar. They take it down below there, and then reverses to close within the trading range. This action allows large interests to mislead the public about the future trend direction and acquire additional shares at bargain prices. A terminal shakeout at the end of an accumulation trading range is like a spring on steroids. Shakeouts may also occur once a price advance has started, with rapid downward movement intended to induce retail traders and investors long positions to sell their shares to large operators. However, springs and terminal shakeouts are not required elements. Accumulation. So basically, what that means is it doesn't always have to have a spring or a shakeout. It could have this just like kind of lazy last point of support phase in phase C. But basically, smart money that has been accumulating all these years, they created one more big sell-off event. And yeah, the big sell-off event was March 2020, the COVID sell-off. And they could have been buying Blackberry as low as $2 at this point, a stock that used to be $150. So what does this all mean? Well, you know, I've talked about Blackberry a few times on Twitter. I know mostly I talk about AMC. But to me, what this looks like is 10 years of accumulation. Now, and then also notice the volume, right? Volume is just in a steep downtrend as price trends down. And then what spikes are winning here, right? You have bullish, big green candles. Now, you'll say, oh, this was the meme stock rally. This was the second meme stock rally in June. So it's not real. Again, you know, the campaigns it's a campaign, right? A campaign to create bullish sentiment in the time when they're selling and bearish sentiment in the time when they're accumulating. And then they want to create a sign of strength, which we can talk about, a price advance on increasing spread and relative higher volume. Often an SOS takes place after a spring, validating the analyst's interpretation of that prior action, right? So basically, this big move up is a sign of strength, just like the COVID crisis was a spring, right? So you can say that it's like it's happenstance or whatever, and then like the '08 market crash caused this beginning of the end of the distribution, right? You can say it's all happenstance and it happened, you know, whatever. And I'm not trying to be a conspiracy theorist or whatever. Like that's not what I'm trying to do with the channel. But it's pretty clear here that accumulation is coming to an end on Blackberry. And on the end of an accumulation, what you see typically is a markup phase, especially if you have the support, the buying support here, right? Because again, remember, retail was getting shaken out here. Nobody cares about Blackberry. Anytime that you, like right now, if you talk about Blackberry to somebody and you don't talk about it in the context of meme stocks, they go, Blackberry, like, why are you know, why would you talk about Blackberry? That's the point, right? So I'd imagine that some sort of security technology, something of that nature, is going to come into play, because I know that BlackBerry was known for that previously. So you're going to see some sort of narrative come for BlackBerry, in my opinion, not financial advice, not, you know, whatever. You obviously you could disagree with me. Like, I wouldn't make any financial decisions just based on this video. Go do your own research. But what I believe is you're going to see some sort of narrative, right, that's related to maybe cybersecurity. I know that they're working in the the car, like electric vehicle technology, like securing those sorts of networks and stuff like that. But over the course, I'd imagine that over the course of the next few years, right, because it's going to take a long time for this all to play out, because it took a long time for this to occur. But over the course of the next few years, you should be seeing a general uptrend for BlackBerry, and I don't think it's going to be related to the meme stock stuff. Like, that might be the catalyst that kind of like drives the first wave of FOMO into BlackBerry, and then maybe you'll see like a reaccumulation occur here, and then like a further move up. But there's going to be some sort of something is going to happen in the next few years, I believe. I could be totally wrong. That helps drive a narrative home for BlackBerry. And then I believe that what will happen next is probably more distribution. And maybe it looks something like this, right? Maybe you kind of create an environment, and obviously it's not going to be exactly like this. That would be crazy. If I could find my bars pattern, perhaps like maybe back here you would say is like a more short-term accumulation occurred here before they really drove BlackBerry. And you can see here that you have like this trading range here. This was like your sign of strength, and then your backup LPS phase, and then you went up, right? You could see, oh, got my marker out. Oh, I can't. All right. You could see a similar thing occur where, you have your markup phase occur, maybe here. And then you create this sort of multi-year distribution again. And so what would the price target be on this sort of thing? I mean, it's a little bit harder to tell, and we'll have to see, but I don't really want to like focus too much on the price target stuff, but just looking at it from here, I mean, you could say that maybe it does create this lower low thing, and then like they're just gonna distribute here, and then eventually they're just gonna kill the company or something in like 2030, just to get rid of everything that they accumulated here, so they get max value on the stock. Or you could say that you could have a more explosive move, and you actually create higher highs, and then BlackBerry becomes like a really influential company in the long term. So yeah. I mean, this is all speculation, obviously, but I just wanted to bring this to people's attention. It's a video that I've been talking about doing for a long time, and I just wanted to kind of show you guys what I was seeing. So hopefully you enjoyed the video. But yeah, this is the chart. I think I mean, maybe it's really nerdy of me to say, but I think it's beautiful to see these Wyckoff events play out on such a large scale. So what I would do if I were you is I would go check out, go look for other charts that have this, especially on long term. That's like the really interesting stuff for me to look at. And share them in the comments if you find anything interesting. I will say Ford, like Ford was brought to my attention. And to me, it just looks like a big old like accumulation over the course of like since the 60s. Which is kind of crazy to think about, or maybe this was a distribution, right? This is an accumulation, and then further like a reaccumulation maybe, and you can look into that. It's a different thing, but Ford looks pretty strong here, and it's just really interesting to see these kind of Wyckoff phases play themselves out. Just a reminder on that distribution schematic if you want to see. It could be like this. Oh, I don't know. Maybe an up thrust in phase B. Last point of supply. I don't know, this higher high is pretty strong. But yeah, so that's pretty much it. Hopefully you enjoyed the video, and until next time. Peace.